So it is Sunday, the 29th of December, and as it is a Sunday and it has been Christmas week, I haven't had any trades. As you can probably expect, the markets barely had any volume, so there was no point in trading in the first place. So I didn't even look at the charts for the whole week. This obviously means we're going to be behind on the challenge. We obviously wanted to pass the challenge based on, a couple of weeks of trading, and we are still minus 1%. If you have watched the last two videos, you will know what's happened on the challenge account and my swing account update. So if you haven't, be sure to go and check them out on the channel. There's my last two videos, basically, the two live trading videos that I've actually posted. So that's all I really have to say. Tomorrow morning is a Monday. It's a Monday that has New Year's Day, obviously, in the middle of the week. So am I expecting tons of volatility this week? Most likely not. Am I expecting another fairly slow week and then good trading the week after? Most likely. So we're just going to be on the charts and just see what happens, basically. Throughout all my testing, I've always back tested through New Year and that first week of the year, the first week in January. So it'll be interesting to see what trades actually present themselves, if there are any trades, and if we can capitalize on any potential trades, even if it is a 1 and 2, 1 to 3 here or there, then that will be great. So I will check the charts tomorrow morning. For the challenge account, obviously for the swing account, as we are still in December, I am completely done for the month, but I will give you an update on my Hydra funded challenge accounts throughout the week, and hopefully we can get some nice trades and some profits. We've obviously had a tough couple of weeks so far, but that's trading for you. I'm not expecting every week to be brilliant. I'm not expecting every week to be terrible, but as long as we end the month or we end the year in profit, that's all we're really looking for. So I'll catch you guys tomorrow with another update on the markets, what I'm looking for, and potential trade ideas, and maybe even a live trade if we actually get a setup that is valid. Okay guys, so we are looking to take a short on GU. If I show you on the chart here, you can see that this is the setup we're actually looking to take. It's been quite quiet. Obviously you can see this mass amount of consolidation, in this full area here, but we have broken to the downside. So we are looking to take a position. We are going to be trading this on the 200k account. As you know, we took a loss on the 100k account, so we're going to now take a trade on the 200k account. So we obviously have 20 lots, and we're going to have an 11 pip stop loss, so we might be able to reduce this to around 19 lots, or even 18.5 lots, and that gives us just around a 1% loss on this position. And then if we look at the price we're looking to actually get in the trade, that is at 25540. So when price actually gets to that 25540, we can then place the order. As it is a market execution, it should be fairly easy to get in the trade. I've had some bad luck with limits as of late, so I want to ensure that I obviously am in the trade and it doesn't come too close without tagging me in the position, as that's what's happened previously. And as you see, that is technically happening right now. Price is coming very, very close to the entry, and then basically not coming anywhere near it. So if we look here, the take profit, we're looking for 33 pips really here to make $6,000, which will be great, which will be obviously 3% profit. So that's what we're looking for on this trade. But in typical fashion, we are now coming away from the entry. So we were around 1.9 pips away. Now we are around 5.3 pips away. So every time I have a setup, I come and start recording. Every single time I do that, price goes away from my entry. It seems like a recurring theme on the channel. If you go look at any live trading video, the same thing happens every single time, and it is very, very annoying. If this does continue to go further away, I will then set a limit on the position, mainly because I don't want to be sat here staring for the next 15, 30, 45 minutes, and a limit can basically counteract that. One way to get around being slightly missed is by taking into consideration the spread when you are setting your limits. So what you could do is add an extra 0.5 pips below your entry, or 1 pip below your entry, depending on the spread you actually have. That is a way to do it. But then obviously you have to be aware of your lot size change too. So if you are adding an extra pip and you have a 5 pip stop loss, you're adding an extra 0.2% risk every single time. So you then have to adjust your lot size according to the new adjusted stop loss. So it has been a few minutes now and we haven't been tagged in. So we are going to set a limit on this position. So we're going to set a sell limit at 22540 with the same stop loss we actually put in before, with 18.5 lots minus 11 pips and the take profit at 33 pips. There we go. Then we can place our order there. So now you see we're going to lose just over $2,000 and we're going to gain $6,000 if the trade does win. Obviously, we want the trade to win. That would be the best scenario. But if you see here, we have been consolidating. So there's obviously a chance the price just goes up, continues the consolidation like this. But in my plan, when price breaks structure, 1, 2, 3 structure points or previous structure points that we've now broken down and are retesting in, that's a sign for me to get into the trade. So that is why I'm setting a limit, looking for price to go to the downside. It could win, it could lose. We're prepared for both outcomes and we're ready to pass this hydro funding challenge. And if we get this trade for a 3% win, we are 3% closer to actually passing. So that is the goal. If I actually show you here on my accounts on the Hydra funding platform, you can see that we obviously had the 100k that we took that 1% loss on, as you see down here, minus $1,000. But the 200k we also took a 0.01 trade, because you need to be careful trading with prop firms because they will have inactivity rules. And if you're not trading one account and you're trading the other, make sure you enter a 0.01, for example, so you don't lose the account due to inactivity. So we took a 0.01 and we lost $0.22. So we lost 22 cents, for example. So still these two accounts, we haven't blown them. People obviously think if I haven't uploaded in a week or two that I've blown the accounts, but obviously that is not the case. I'm going to show you every single trade. And if I do lose the accounts, you will see, and then I'll give you permission to laugh at me. But that is all I have for you now. Hopefully this limit does actually get hit and we can get into the trade. But if not, I'll catch you guys for the next trade. Okay, so based on what you can see on the charts right now, we did not get tagged in the position. So price actually melted down, from this level where we were actually looking to get in. The next 3 candles dropped down and would have been around 20 pips or 2% in profit. And now obviously price is coming back to the upside. As it is past 12 o'clock, I don't actually enter trades past 12. So what I'm going to do is I'm actually going to cancel the limit. So we have the limit here. We're actually going to cancel this like that. Go back on the charts here. And the reason I don't trade past 12 is my strategy is from 8 till 12. So I won't be entering a position on this particular trade anyway. There could be another scenario, for example, where I'm in a trade and it gets tagged in at 12 and then I hold the trade obviously through 1, 2, 3, however long the trade actually is ongoing for. But entering the trades based on my data, it has a high chance of losing if I enter past 12, so I don't trade past 12. This obviously doesn't apply for my swing trading, but because this is an intraday trade, I have my set trading hours, I trade those, and then anything outside of them I basically ignore. But if this was a swing trade, for example, and I was on the 4 hour, then I'd be like, okay, I'm still looking to get into the trade. But you can see here the conditions over the past few weeks from the 4 hour time frame. There'll be no possible swing trades anyway. So that is the trade we missed. Perfect setup based on my strategy, but we obviously didn't get tagged in. And now we are consolidating again pretty much. So it is New Year's Day tomorrow, so I'm not expecting a lot of volatility over the next few days. So perhaps we'll resume next week if we don't have anything on Thursday or Friday. Okay guys, so we obviously had that previous trade miss, as you can see here. Price actually This is where we're looking to enter, and it just missed our entry. Price tagged in perfectly and then dropped down, but that was in New York session, and I don't trade New York session for this 15-minute strategy, so we didn't get in the trade. However, now we've obviously broken structure to the upside here, and we're now looking to get into some long positions. It's currently 9:30 in the morning, and it's a very cold morning, a nice winter in Britain, so we are looking to get into the trade. If we're looking for an entry point around this level here, with around 10 pips stop losses, just around there, and obviously I'll take profit at a 1 to 3 risk to reward, just like this. There we go. So this is what we're actually looking at. So 24003 for the entry. If we're trading here on the $200,000 account, we obviously know the stop loss. If we actually get in the trade limit for buy, 124003 with stop loss, I think it was 10.3 pips, just like that. And then I'll take profit obviously around 33 pips. So you see, if we just increase this slightly, just like this, then we are looking to lose. There we go. That means if we lose the trade, we're going to lose, let's see here, $2,000. And if we win, we're going to make $6,400. So this is the position we're actually looking for right now. It's very, very simple. I make my trading as simple as possible. If price breaks structure to the upside and it breaks in London, then I'm looking to enter a buy. If it breaks in to the downside, I'm looking for a sell. Obviously, it's not just that simple, otherwise it'd be very, very easy to trade. But as you've seen from my results, I don't average massive percent per month in profit, but I'm profitable over the year. So people will see, let's say this prop firm series when I'm trading with the Hydra funding accounts, and you'll be like, oh, why aren't you winning every week? Why aren't you winning every month? And that's just the reality of trading. There's going to be weeks, there's going to be months, there's going to be, in some cases, years where your strategy just doesn't perform as well as you'd expect it to perform. Even massive hedge funds, they could be losing for 6 months of the year. But the way that trading works, if you have a good streak, it can wipe out months and months of losses and bad performance, which is the best part about it. So the last 2 trades we've actually had that I've actually placed limits for on this Hydra funding account are ones that have actually missed by 0.5 pips the first time and around 1.5 pips the second time. So we've been very unlucky, some would say, but I've just been entering according to my plan. So is it really unlucky? I'm not sure. I'll just say I just wasn't as accurate. I wasn't accurate enough to get into the trades. That's the best way that I see it. So we're currently looking for price to fall down now. What I've noticed is when the retest is relatively quick, it's either a very, very quick loss, which is great because if you're losing a trade and you want to know when you're wrong, knowing as quick as possible is the best thing possible, in my opinion. I don't want to be in a trade that's going to lose and be in it for days. I want to know when it's going to lose quickly so I can move on to the next trade. And I can evaluate this trade and then move on to the next. And it also means if price comes in down like this, tags in quickly and goes to the upside, then it is very easy to obviously track. So we're going to take a screenshot of this trade here. There we go, screenshot taken. So we can journal the trade after it is done, like we did in the first live trading video. But we are around 17 pips. I'm pretty sure away from the entry now. Around 7 pips even from the entry. So it's getting close. It's getting close. But I'm surprised the pound's even going up. The economy here is not looking too great. As you've probably seen on the news, not many companies are actually willing to invest in the UK anymore because of how unstable the economy is. It's basically so bad for business here. It's no surprise that people are going offshore to tax havens because we have ridiculously high tax. And it's just not a good place if you are an entrepreneur or a business owner, basically. The trade says to buy, so I buy. No matter what I think about the economy or what's happening in Great Britain right now, it doesn't really matter. If the strategy says to buy, I buy. Okay, so we're coming relatively close now to the entry point. I feel like I've said this so many times recently and, been close to the entry, but they're not tagged in. So hopefully this is the time we do get tagged in, even if it is a losing position. It probably sounds weird saying that, but I like to see my strategy getting into trades. If the trade is valid, I like to be in trades. I don't like to be missed by half a pip or a pip even. So we've got a new 15-minute candle now. Okay guys, so the worst has happened and it's come 2 pips from the entry and then now going in the desired direction. So what I'm going to do now, like I do every time and like I have to do every time pretty much, is come back to you if price does actually come back to our entry. It's not great and it's happened 3 times in a row now, but I'm just following the plan and letting price do its thing. I'm not forcing myself into a trade when it comes near the entry, because that would again ruin the risk to reward or severely reduce it. Let's say I did force myself into a trade 2 pips early, that reduces, obviously, well, it increases my risk by 0.2%, because obviously 2 pips is 1/5 of 10 pips, obviously. So my risk then becomes 1.2%. And then if I don't adjust that with the stop loss size according to the increased stop loss size, then it means that I have to reduce my lot size because of the larger stop loss, which then means my winning position. So when price goes to take profit, hypothetically speaking, the win will then be smaller too. So you basically end up losing profit overall. And that is why I'll never force myself into a position if price hasn't come to my entry and if it's just 2 pips away, for example. Okay, so we're ridiculously close to the entry now. You know, a matter of 0.01 pip, some would say. That's what it looks like too. So we have been teasing the entry. So hopefully it drops slightly more and actually tags us in. Okay, we are in the trade. We are in the trade. Finally, we managed to get into a trade. Will it win? I hope so. After all this pain, now we're just going to see what happens. We're going to see what happens. You know, like I said before, if price breaks down these lows here and goes below, I obviously don't want to be in the trade because, you know, I'm wrong, basically. So if price just melts down to stop loss now, I was wrong. It's as simple as that. But if price goes up and breaks its high here, then it's perfect standing for the trade to then go on and hit the take profit. Okay, we are basically 5 pips in drawdown now, and obviously that means we're halfway to our stop loss, which isn't a great time so far. But that's fine. You know, I can dying on the inside, but that's okay. As long as the trade's open, there's always a chance. That's my motto. Okay, so we are nearing the stop loss, around 3/4 of the way towards it. And if price obviously closes below these levels here before hitting a stop loss, then I'll get out of the trade, because that's mainly what invalidates the position for me. If price closes below the previous low, obviously here we closed quite convincingly above the previous high, so that's obviously a great sign that we are going to go to the upside. But now we have the opposite, where price is now looking to break the lows. So based on my trading, if price closes below now, we can look for a retest up here to look for short positions further down to target these lows perhaps, because the same trade has actually just been valid, but the opposite direction now. If that does occur, obviously. We are very, very close, around a pip or so away, basically, a pip and a half away from the stop loss. So it's most likely inevitable. But like I said, when I'm wrong, I want to be wrong quickly. And then in this instance, it's happened relatively quickly. If it obviously does hit stop loss. Like I said, if the trade's open, there's still a chance. But it's not the highest chance possible, obviously, because we only had to drop a couple of pips to hit the stop loss, and we have to go, 36 pips to hit the take profit, so or something like that. So thus, it's an interesting situation to be in. Not a favorable one, but a situation nevertheless. So we do have 9 minutes until the next candle. So if price obviously wicks up and closes positive, that would be a great sign. If it closes like this, then that is a terrible sign. But obviously we have 8 minutes now before the next candle actually opens. So it could hit the stop loss before then. It could not. I guess we'll see. So we lost. It's as simple as that. But people will see it as a bad thing. I personally don't see it as a bad thing. Like I showed in the previous video, I'm pretty sure. Like if I quickly show you my stats for my 10 months of trading last year, for my swing trading, for example, you'll see that I only have a 46% win rate. So out of 100 trades taken, I'm only likely to win 46 times. And this swing account is with a 1 to 2 risk reward. So obviously with my day trading that is a 1 to 3 risk reward, I can afford to lose more than 54% of the time to make profit. So if I'm profitable with a 46% win rate, anyone out there that's too focused on win rate, it really doesn't matter that much. Because let's say you're trading with 1 to 5 risk reward, for example, and people are telling you that you need to have a 90% win rate, an 80% win rate. This is just ludicrous, because based on your risk reward, you only need, let's say, a 20% win rate or a 30% win rate, and you can do extremely well. But these people are telling you that you need a 99% win rate, a 80% win rate, 90% win rate. They most likely have very, very small rewards on their trade. So it's obviously a lot easier to make 5 pips than it is to make 30 pips, especially with obviously the risk reward. So just bear that in mind. Calculate your data based on your win rate and your average risk to reward per trade. So what's your average win, what's your average loss, and what's your win rate through maybe your backtested results over a decent sample size and not just 1 or 2 trades. And also the results based on live data too, because anyone can be profitable with backtesting data, but live data can be very, very different. As you can see now, we are on the Hydra funding dashboard. It's obviously the prop firm I'm trading for these live trading videos. We have the 200k account and we have the 100k account. If you obviously want to trade with Hydra too, check them out in the link down below so we can trade alongside each other and hopefully make some nice withdrawals in the coming months. That is obviously the main goal. And if I get some Hydra funding payouts and you do, then that is a positive for the both of us and for everybody watching this video. So you see this trade here, it is a loss, just over 1%. Obviously the stop loss was just over 10 pips. It's annoying. It's definitely annoying to lose and have 2 weeks of trading or 3 weeks of trading with just losing trades and missed trades. Every trade that's missed by 0.50 pip or 1 pip has actually ended up flying to the take profit, which you've seen earlier in this video. But we also had a 0.01 trade, like I said previously, because they have a dormant rule basically, so you can't leave the account dormant, which is understandable. So this account is down 1%, and the 100k Hydra funding challenge is also down 1%. And obviously we had that 0.01 on that account too. So not an ideal start to both challenges, but if you'll notice previous challenge videos with various different firms, I've always seemed to lose the first trade, and I always seem to lose during the start of the month. Obviously, I'm not saying that I'm not going to trade the start of the month, because if my setup presents, I enter the trade. And there are obviously scenarios where I win the majority of trades in a month, or I win the first 5 trades, different scenarios for my day trading. And there is data to back this up too. So if a setup presents itself, I'm going to enter that setup. It's literally as simple as that. So now price here has obviously fallen to the downside. What we can do, because we've taken a screenshot, we can clear this and we can look for a potential entry on a retest, maybe like in this zone here. So if price closes down below here in 2 minutes, look for a retest in to then look for shorts further down. That is what we could potentially look for on this current market conditions. And what I'm going to do is, if I take a loss, I then start trading the other account, so I don't build up a massive streak of losses and drawdown on just one account. Because if I'm in drawdown, let's say I lose 5 trades in a row, if that's split between 2 accounts of minus 2.5% each, those accounts are then both very, very far away from the overall drawdown on the accounts. So the way I'm doing it is very, very different from how I would normally trade just one challenge, for example. I'm trying to split my risk so that I don't have all my eggs in one basket to get close to the drawdown limits. If it was obviously my personal trading account, I would trade it very, very differently. And I don't really care too much about drawdown, because I know that over the year I will comfortably get out of that drawdown. So it's not really much of a concern. But yeah, this trade lost, and hopefully we get another trade next week, or maybe even today. Let's see what happens with the markets.